Hey everyone, Adam Bergman here, IRA Financial, and I have the pleasure of talking with Mr. Keith Bliss, President of Capital and Market. And on today's video, we are going to discuss the advantages of making a private placement investment. So Keith, before we get started, how about give us a 1-minute description of what a private placement is, and then we can talk about some of the main advantages.
So a private placement is the ability of an investor to have access to and invest in a private company, either debt or equity securities. The other advantages is that in most cases, these investment opportunities have been vetted or due diligence by an investment bank, a regulated investment bank. So the investor can feel comfortable that the opportunity that they're looking at and they have access to has a reasonable certainty. It certainly follows the regulations, but also should be a good deal for the good transaction for the company to look.
Right.
To look at.
So bottom line is the investments on the capital and market platform and most private placements, these are non-public companies, right? This is generally not Apple or Google.
They are all non-public companies at this point with what we do at Capital to Market. They're all private issuers that we've either sourced or have been shown into us to raise money from one of the exempt structures that we utilize for private placements.
Right. So I'm an investor. I have some money either in an IRA or 401k or just some money in the bank. And, I toggle the capital market website. I see some potential interesting companies. What are the advantages? Why would I want to take some money and invest in these types of businesses?
Well, for anybody, there's one distinct advantage. Number one is it allows the investor to have access to an opportunity, usually for a company that's earlier in their stage of development. So take a look at the great companies that we have today: Apple, Google, Facebook. Any of these companies, they started out by raising money from private investors. Now, the difference being, when they were going through that stage of their evolution, the private investors were generally only the wealthy or the VC funds sitting out in the Silicon Valley or some private equity funds. Now, with the changes in the laws and the regulations, unaccredited and accredited investors, individual investors have access to these same opportunities. That's the first distinct advantage. So it allows you to get into an opportunity, hopefully investing in the next Google or the next Facebook or the next Apple before it happens. It'd be nice for everybody. Yeah. The second distinct advantage with a private placement as it relates to IRA accounts is typically what you have in these private placements are somewhat longer hold periods. So unlike a public security where you can buy and sell and do the transactions out in a public market, there is one of the downsides to a private placement is that there's not a lot of liquidity traditionally inside of those. But if you're investing with an IRA account, you really don't care about that, right? Because you have the ability to have value creation inside of a company and then realize it later when you're able to take the money out. So for an IRA holder, private placements are the perfect vehicle as opposed to what we traditionally do in our IRAs, which is go, buy a slug of ETFs or other, top 10 stocks or maybe some bonds. This allows the IRA financial holder to diversify their portfolio inside of private equity opportunities, good private equity opportunities.
So bottom line is, hey, I get potential access to some really exciting small or mid-sized growing businesses, right? So there's obviously high reward, right? So that's why in an IRA, I guess it's helpful. You have deferral or tax-free growth like a Roth IRA, but also there's a little bit of risk, right? Because these are private businesses, they're vetted, but they're still private and growing.
Yeah, I would say that's absolutely a fact, Adam. When you look at having access and investing in private opportunities, there's always a higher degree of risk than there is in investing in public securities, without question. But one of the nice things about our partnership, what we're doing is you have an investment bank. We have an investment bank at Capital to Market. It's our job, our obligation to, from a regulation standpoint, make sure that these deals, these transactions, the projects are following all the regulations, number one. So the investors should feel comfortable about that. And we also have a coda inside of Capital to Market that we're not just going to take every possibility, every deal that comes to us at this point in time, right? It's our job. It's my job as president of the bank to make sure that the opportunities that we're showing and giving access to the clients are the right opportunities that we believe have a reasonable chance of being successful.
Good. So you're mitigating risk, and obviously the goal is high upside, right? That's why private placements are so exciting. These companies, we hope, if we make the right investment, they have high growth.
Well, that's right. And that's why we like to have a diversified portfolio of opportunities to show people, whether it's fintech companies, whether it's agroforestry companies, whether it's commercial real estate opportunities. We want to be able to hit many of the sectors that we know investors are looking for. And then it's our job to make sure that the opportunity is structured properly, number one, with the security that we're selling, but also that we've done our work to work with the issuer client to say that this has a reasonable chance of succeeding. And again, if it takes, 5, 7, 10 years for that value creation to be realized, and then we have a liquidity event, either in the form of a public offering or some sort of merger event, then the money just accrues inside of the IRA account. When the investor's ready to take that money out, they have the gain.
Right. So there's no tax on the gains. And obviously, to me, the advantage is the high upside, right? You get access to emerging businesses, and the capital to market platform, makes it super easy to do.
Well, that's exactly right. And in most cases, what we also try to do is try to mitigate the risk of an investor playing in the public markets, right? I can go buy some Apple right now today, but I have no idea whether Apple's going to go up or go down. I have a reasonable chance or reasonable knowledge or thinking of what it's going to do. But again, inside of private equity, it's a longer hold period. You're able to read all the documentation, understand the deal, understand the securities that you're buying, and then just wait for the value creation.
Cool. So now, obviously, great diversification play, ability to get access to emerging assets. And then in retirement, it really correlates well in terms of the long-term hold. So there you go, Keith. It makes super sense to me now. I always, had clients doing private placements in their IRA, and now I actually understand why they're doing it. So thanks, Keith, and hope you guys enjoyed today's video.